Hey guys, I hope you're well and welcome to today's edition of 600 Seconds of Trading. My name is Alejandro Zambrano, Chief Market Analyst with TradeCaptain.com. Today we're doing it much later than usual. Reason for this is that I am having some technical issues, and that's why I'm doing this as a recorded presentation instead of doing it live. Now, if you're new to this presentation, it's a daily update usually hosted at 9 a.m. London time in the live trading room here at TradeCaptain.com, and we take a look at things like cryptos, euro dollar, crude oil, gold, and the DAX 30. Now, before we start, I need to stress that trading financial markets unfortunately is risky, and there's a risk that we'll lose our invested money. For more on this, click on the risk disclosure statement in the very bottom. As well, I'm going to provide you guys with my view on the market. I'm going to tell you where I think traders are buying and selling, but this doesn't mean that you need to go out and do that. And as well, I've been doing this for a long time, but doesn't mean that I always get it right. Okay, euro versus the USD. So the market went from being stabilizing a bit like the pound dollar and potentially heading higher the euro to quickly turn bearish again. The dollar is doing really well, and the euro today just traded below last week's low of 118.16, and that by itself is opportunity to sell because traders that are long here or bought here are getting squeezed out. But this is more of a scalp opportunity, if anything. I think as long as trade below maybe 1887 or so, this market could potentially drift to the downside, maybe 1713. So that's one option, and by doing this, we get a relatively good risk reward ratio. It is of course possible to hold on to the position for longer if you're looking for slightly longer term outlook. So if we short here and we target the November low, could potentially make 250 pip return, and at that point we can put stop loss where it should be, which is 119.98. So the 119.98 is that big level that is gonna take days for the market to crack, whereas the 119 level, which is more of a scalp setup, is more for scalpers. So those scalpers short here, and then stop loss goes on the other side, whereas longer term traders. And the benefit of trading more long term, that you increase the likelihood of improving your odds is because you stay in the position for longer, so you allow the market to sort of do weather out any sort of noise. But the problem with that long-term view is just that right now the risk-reward ratios are not good because of the market, because of the high so far away here, and that's where we put the stop loss. So these are the two options. The third sort of option is just to ignore this and just wait for a stronger pullback, maybe up to 118.74 or maybe up higher, which is putting a stop loss on the other side. Here's Bitcoin, and Bitcoin is moving in our direction, and shouldn't surprise anyone. Technical analysis works really good on crypto markets, and I think it has to do with the fact that there's not a lot of macro fundamentals, and a lot of the macro fundamentals people are aware of, but it's very difficult to sort of say what's going to happen in the in the long term, and that is why I think by the looks of it, it's more mass psychology and behavioral finance that governs things like Bitcoin. So the idea was to sell on the breakout, the alternative, sell on that pullback, and allow this market to trade to the downside. Now I do think we could potentially lower the trend defining level just above this high here, and this is the May 7th high, and I'm happy to be bearish below that level, so reducing the risk just a little bit. But in the long run, I think we're gonna hit this low here. This support level is the April 17th low, and I think this is where the market is heading. And if we go up to 88.98 again, I think traders gonna sell. I think we can hit this level and then maybe go all the way down to 7,035, and then we'll see what happens. But I suspect the market is gonna trade sideways between these levels. I do not anticipate a break to the March low, but of course if we do so, that could open up for further decline down to 3,524. Here's the price of crude oil. Crude oil yesterday did try to spike to the upside. I hope you were not caught in that. So it did spike above the weekly high here from last week, but then quickly pulled to the downside. I was looking to go along myself, but I wasn't actually looking at the screens, and I didn't even notice that that breached to the upside. And now when you look at the market, we're still stuck, so there's nothing really happening here. The overall trend is bullish, and I do think we could head to the upside, but the good opportunities is if we have a correction down to maybe 66, 69.22, which is the third fib of the Fibonacci from this low to this high. It's really important to have those good risk reward ratios, and that's why I'm waiting for that pullback. The alternative is that we have actual break to the upside. I think that could potentially push market higher. I think trips might go long, stop goes just below the low, so the risk about 179 pip. If we head to the upside, make 119, and then if we hit the 2011 low, we can hit that. We could potentially make up to 323 pips. But here again, you can see the issues with the risk reward ratio here, and sort of the better risk reward ratios, they are down here, because here we risk 185 pip, and then if we just go up, we make 260, and then if we hit the level here, make 390. So those are the really good risk reward ratios. To give you a good idea, I bought myself down here at the 68 29, 68.30, and I booked profits. Well, actually, it was quite some long time ago now, but book profits, I think I was about here at 71.50. Since then, I haven't touched that. Now, this is the price of gold. So the market slides through support. This is also one of the sort of the top trade ideas I had in my special webinar, and beautiful sort of setup. The market pulled back a little bit. I'm not sure. I don't think it's gonna pull back to that level again. So if you missed it, you missed it. And if it goes up, yeah, of course I want to look to sell around the May 1st low. I think that's sort of very natural. But I think now trade sideways for a long time, and I think this is going to remain under pressure and just trade lower. So much like the euro dollar just breaking down. Here's the DAX 30. The DAX 30 is holding up well. You might even think that this market is stuck here. And for now, I'm short and bullish. I'm not 100% confident though, or I personally don't think this makes too much sense to get involved. The idea was to buy down here or here. That worked out fine. I think eventually we're gonna head to the upside, but again, you need to have that risk reward ratio before looking to get involved here. Okay guys, that concludes today's market update. If you like this video, don't forget to click on the video and hit the like button. As well, if you follow me on Twitter, please don't forget to retweet and help out to spread the word about this webinar. Why? Well, because if more and more people are watching it, then we do more of it. Whereas if we see that the concept or the webinars don't grow, then we'll potentially do something else that attracts people better. So by sharing and spreading the words and hitting that like button, you let us know what you like and what you don't like, and then of course you try to cater to that. So if people want to read more articles than watching videos, then we'll know that, and vice versa. Okay, have a good day, and I'll see you guys hopefully tomorrow at the live trading room. I can't guarantee you that I'm gonna be live just because of the technical issues, but I'm gonna do my best to be live at 9 AM here at the live trading room on tradecaptain.com. Have a great day, and hopefully see you guys tomorrow. Thanks.